Hi traders, my name is Oliver Velez and welcome to another edition of Trade the Open Like a Boss. This is actually part 17 and I have to say that I am staggered by your generosity. Episode number 16 broke all viewing records. Thank you so very much for that. We reached 1,000 views in less than 2 days, and let's see if episode number 17, one of my favorite of all, can reach 1,000 views in 1 day. What I'd like to do is talk to you briefly before the video about one of the most powerful trading tactics that I teach my traders. It's called the Bear 180 setup. I sometimes refer to it as the Bear Twin Tower setup. Now, this particular setup is so powerful that I teach my traders that it is the single setup that actually demands that you play it heavily. We tend to break our buys and sells up into 4 broad categories. There's the really, really light nibble. Then there's the light buy, the medium buy, and the heavy buy. Sometimes there's the super heavy buy, but that's very, very rare. With the Bear 180 play, it is mandatory that my traders play this play on the heavy side. It is not up for discussion. It is not a choice. This play is so powerful that it demands that you play heavily. Now, it's a very simple setup. It's a very, very powerful green elephant bar. I tend to call the elongated green bars on the 2-minute or any time frame for that matter, but particularly on the 2-minute, I call them green elephant bars. They're elongated, wide range, fat green bars. If an elongated elephant bar is immediately followed by an elongated red bar that eliminates or wipes out the vast majority of its greenness, of the green bar's greenness, a Bear 180 setup has materialized, and the play is to go short once the low of the fat green bar is violated. Now, the low of the green bar can be violated by the initial red bar, or it can be violated the next bar or several bars later. But whenever the low of the initial elephant green bar gets violated, that's your entry point on the short side. And there should be an attempt to get short heavily. Now, so many traders ask me about my stop. The technical stop for this setup would be over the 2 highs of the 2 bars, whichever bar is higher. Let's see how the Bear 180 panned out today. Apple, of course, now is breaking the high of its first 2 minutes, which basically tells me that the stock is likely to rally first before the drop materializes that I'm looking for. Now, my traders are very much aware of the fact that gaps do have a tendency to fill, but not completely. About 50 to 65% of the gap is normally filled. If Apple moves into this zone, I will look to get short in that area. If it drops first, I'll look to get short below the first 2-minute low. Let's see what happens.